Hi there, Serial Trader here. Let's have a look at the major US indices. And so far we have one trading day of this week. I didn't do a video over the weekend there, but we didn't miss a whole lot. So I'm still currently favoring this as my lead wave count. And that's we have our 5 wave move down from the all-time high down to the October low for possibly a larger wave 1 or a larger wave A. And now at this point, instead of just having that simple ABC up for a quick wave 2 or B, it appears that we need to correct more time, which I remember touching on originally, saying that yes, this was an appropriate price correction, but really didn't work enough time off in proportion to how much time we consumed coming down in this wave down. So now, even though price has probably had most of its correction already, with this first wave up, we're now working that time correction as well, and possibly a little bit more of a price correction, although we haven't actually challenged those previous resistance levels yet. So with that being said, I do like that we're working a possible WXY double zigzag for either a wave 2 or a wave B, and I've got the Fibonacci retracements of this overall move down. So we've already hit the 618 on our W wave up there under this interpretation. The 786 is up here, and then we also have the equality relationship between W and Y projected off of the X termination point, which kind of falls right in the middle of the 618 and 786 overall retracement. But that being said, it doesn't mean we actually have to go up here, and it doesn't mean we actually have to take out the previous highs here either at that 618 retracement level. Today we gapped up, continuation from last week's bullishness, but not very good follow through from the gap up, and actually we did a doji star, so a very indecisive day. So at this point, it could be a doji star reversal. We would need confirmation by trading down lower tomorrow, and the first step would be coming down, closing this gap, maybe getting back below the T line. That would certainly be a bearish development. If you're looking to position for a bearish trade at this point, as enticing as this currently looks for a potential bearish entry, and you could enter here bearish and have your stop at these previous resistance levels, which isn't too far away. So from a risk reward standpoint, you're not risking a whole lot for a potentially large reward if we resume a downtrend, but I'd rather see a little more confirmation as far as this at least short-term bullishness exhausting itself. So this is kind of my primary wave count currently. This is the one I'm favoring the most heavily, although there's another almost equally viable one currently, and that's that we have a 5 waves down for a larger wave A, and now we're working a contracting triangle wave B, which could easily take us into the new year or towards the end of December anyways. This triangle has proportional time consumption. But that would be interesting information in itself. So if we do just have an A and then we just have a simple triangle B and we come down in one more leg down in C, that would actually just be a simple A, B, C down, zigzag, and the wave B of the zigzag was a triangle. And that would actually mean that we should be looking up again in a new impulse wave, the all-time highs, after we make our third leg down, our C wave down off the triangle. But this needs to develop more to become a triangle. So far we just have one, two, 3 waves. We need 5 subwaves within the triangle, and they need to be contracting in nature. So the triangle will remain a viable possibility as long as we don't take out the high here of the current A wave, which on SPX is 28.15.15. So anything below that, and we can still keep this triangle interpretation alive. If we do get beyond that A wave, then we have to go back and lean more heavily on the WXY interpretation, right? Because obviously in a triangle, it has to keep making a lower high and higher low, and a lower high and a higher low until it breaks out of the range. Where if we get beyond the previous high, that just doesn't fit the pattern. All right. I'll also mention, get this a little bigger again. I'll mention we have this long-term Elliott Channel connecting the bottom of wave 2 with the bottom of wave 4 and just projecting that outwards. And that's been a nice uptrend support line, which we broke here from the decline starting in September, ending in October. And you see we came up one time, poked above this lower support trend line briefly, and then failed back below it. And now once again we've come back up, and we're just kind of testing this what used to be a support line, now perhaps acting as resistance. So that's interesting to watch as well. So still, despite obviously having a short-term rally here and definitely some bullishness from a trading perspective, the chart overall still looks pretty vulnerable to another sell-off there and potentially a major sell-off. But we need confirmation, or at least I need confirmation before I'll try and establish anything as far as a big bearish position. Another thing about December, we're into the month of December now. Usually, you only get fairly significant trading action maybe the first couple weeks of December, and then after that, things just kind of go sideways towards the end of the year. Very light volume, typically lower volatility, because there's a lot of market participants just not at their desk, just not participating. They're on holidays or whatever. So, looking for some sort of major, event in December as far as a big sell-off starting. It's a pretty tough order. Even if it's coming, it's more likely to kind of hold off until the new year. Just looking at past, even significant major declines like 1929, and I believe some other fairly significant stock market declines, you still had a fairly bullish December month. So that's something to keep in mind as well. But we'll see what the chart gives us. I mean, if I get say we have the doji today and tomorrow we get a bearish engulfing candlestick and close the gap and close weak, well, that's probably a good signal that I would likely act on for a bear trade. But we'll have to see what we get. Now that we've kind of hashed through where we are at as far as the wave count goes and what's going on there, look at the thinkorswim candlestick chart. So you can see that the 50-day simple moving average is certainly pointing down and threatening to cross below the 200, the so-called death cross. We haven't gotten it yet on SPX, but we have gotten it on the NASDAQ. I'll get to that in a bit, though. So our daily oscillator is now in the overbought condition, and this daily oscillator has been pretty reliable as far as marking significant pivots, whether they be tops or bottoms. So obviously we're closer to at least a shorter term top here with our stochastic oscillator here in the overbought condition. We did a big doji start today, very large upper and lower shadow, very small real body. We're above the 200-day moving average, we're above the 50-day moving average, but that's not overly convincing at this point. And we gapped up, so even in a fairly bullish scenario, like say we're going to continue up here and go to the equality relationship or even the 786 retracement of the overall decline, even in that scenario, it would be likely to come down and close our gap first. And that could even happen tomorrow. I mean, usually these gaps don't last too long. If you look at this gap, for instance, over here, this upside gap, okay, so we had 1, 2, 3, so basically 3 trading days until that gap got closed, so it really didn't take too long. And then we have this gap down over here. I'm just using this as an example to, give you a bit of a timing idea as far as when gaps tend to get closed here, just on recent price action. So we had the gap down here, then we had 1, 2, 3, 4 price bars until that gap got closed, so 4 trading days. So yeah, usually within a few days, sorry, a few days to a week at the most, it seems. Typically these gaps get closed. This one took a little longer to close here, but it did still get closed, and it was let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, let's say 11 trading days, so about a couple of weeks for that one to get closed. I may have miscounted that by 1 or so, but you get the idea. So that being said, this is the daily. Certainly wouldn't be surprising to come up a little higher and test the previous highs, although this certainly gives pause, this doji star, Dojis are interesting. They can be just merely a pause in the trend and lead to continuation, or they can be a reversal. It really depends. Typically, how it opens the next day and closes after the doji, that gives it a more reliable indication of whether it is a reversal or it's a continuation candle. So tomorrow is actually a fairly important trading day as far as putting this doji into context. So that's a daily chart in SPX. Let's look at the weekly. And actually, we'll do the monthlies on this video as well, as we just closed a month. Okay, so on the weekly, we're actually above the weekly T line, which is somewhat significant, as that has provided the resistance essentially throughout the entire decline up until now. So that's a bit of a notable development technically to get over the weekly T line. Although so far, I mean, we just have one day of this week obviously, but so far a weekly doji star, that doesn't mean anything because there's 4 more trading days in the week. Well, actually Wednesday's closed for Bush passing away there, but normally we'd have 4 more trading days, 3 full trading days. So obviously this candle will likely change from what it's currently displaying. But last week, not particularly a candlestick buy signal. Yeah, it was a bullish week, but it wasn't an engulfing candlestick or anything like that. Looks like this weekly, 20 week simple moving average may provide some resistance. It appeared to over here on this candle, so we'll watch for that. Let's see here. We'll go to the monthly. It's still hard to really embrace, any kind of significant bullishness when you look at the charts on these different time frames. Obviously, I'm open to anything. Anything can happen with trading, but things are still looking kind of bearish, technically at least. Now, monthly. So we had our monthly bearish engulfing candlestick in the month of October, engulfing 4 prior months. We did basically a monthly doji in November. So a large upper and lower shadow, fairly small real body. Didn't make a new low, although certainly challenged the lows. And now we've, we're still just within the range of November's month right now. And obviously we just have one day of this month. So this candlestick currently means nothing on the monthly time frame. So it should be interesting to see how this develops. We don't actually invalidate the bearish engulfing candlestick on the monthly unless we take out this high of the candle, which on SPX is 29.39.86. So basically you have to break new all-time highs to actually invalidate this bearish engulfing candlestick, which I'm obviously not anticipating as being the case anytime soon. Alright, so that's SPX. Now we'll run through the Dow Jones Industrial Average. Okay, Dow Daily. Let's see what we got going on here. So the Dow Daily did not get up to the previous resistance levels from last month there. We gapped up, did a doji. We're above these two, the 50 and the 200-day moving average. We're getting into the overbought condition here on the stochastics. So very much in the same scenario as SPX. Looks, at least on a short-term basis, ready to pull back a bit. Although we can't rule out further pressure on these previous resistance levels either. We'll have to see how tomorrow plays out. On the weekly time frame for the Dow, let's see how we're looking here. Okay, so on the weekly, we've just gapped up here just like we did on the daily. I would suspect we're going to at least close this gap even if we do have a little more upside juice left. Well, this doesn't really look overly revealing on the weekly chart. No particular signals here from last week. Okay, let's have a look. Go to the monthly time frame here on the Dow. See if there's anything interesting there. Big doji month for November. So we had this bearish engulfing candlestick in October for the Dow, engulfing 2 prior months. Very clear doji for November, monthly doji, large upper and lower shadow, small real body. Certainly didn't invalidate this candle, which we'd have to take out the all-time high on the Dow to do so. And now we just started the new month, so nothing to remark on there as of yet. Okay, so that's the Dow. Very much looks similar directionally to the S&P. So the NASDAQ composite. All right, NASDAQ composite. Daily. So the NASDAQ looks the most bearish here. And I'll just get rid of this channel here. We actually have the 50-day simple moving average crossing below the 200-day here. So we have the death cross on the NASDAQ composite, which we don't have on the other two indices. We also made a lower low down here on the NASDAQ, where the other two made a higher low. So this pattern is slightly different, although we still have 5 down here. And I think we're either working an A, B, C expanded flat, or a running flat if we don't make a new extreme. Or we're working an A, B, C, D, E contracting triangle here on the NASDAQ, which is certainly possible. Even though the S&P could also be working a triangle, despite the B wave not making a new extreme. It's just a variation of the triangle, but you can still do that. The B wave can make a new low, or in the other direction, make a new high in a triangle and still be very valid as far as the rules and guidelines of the wave principle go. But NASDAQ in the overbought condition on the oscillator, from the opening price, the NASDAQ gave back quite a bit. So a bit of intraday weakness, more so compared to the other two indices. We have a gap that we need to fill, even if this does have a little more upside to go. So I'd say at the very minimum, some near-term consolidation to fill the gap is going to happen here soon, if not even resumption of some bearish action there. So looks like we're finding resistance here on the falling 50-day simple moving average. Didn't even get up to the 200-day yet, unlike the other two that are above their 200-day. So technically speaking, the NASDAQ is the clear weakest as far as the indices go. And that might make me want to head more towards QQQ puts, or some sort of bearish option position using QQQ. If we really do have kind of the leader here to the downside, then it would probably make more sense to go after this than to go after SPY. But at this point, certainly not a confirmed sell signal. I need to see something more convincing and obviously get back below the T line to really embrace that some sort of major downside has resumed here. And I have my doubts as to whether that can really get going to any degree, especially as we get towards the latter half of December. Okay, so that's the daily on the NASDAQ. Now let's have a look at the weekly, since we just closed the week last week. So last week we still stayed below the weekly T line. Now obviously we're above it, at least for now. That could certainly change on a closing basis, depending how this week closes. But still somewhat notable, as the weekly T line has been providing good resistance all along this downtrend. It may still do so. Obviously this week hasn't closed yet, so we don't know. Other than that, last week not a particular buy signal, just a green week. And okay, let's look at the monthly here on the NASDAQ. And the monthly, let's get this a little more scaled. Okay, so on the monthly, NASDAQ had the best monthly bearish engulfing there. The most strong decline engulfing 4 prior candlesticks, and well below the monthly T line. And then in November we had a monthly doji, although we did make a new low. So that actually kind of confirmed the bearish engulfing, because you'd want to trade in the direction of the engulfing candlestick for the next 3 to 5 price bars. So we did trade, despite doing a doji, still as far as the range of the month, we did still trade lower in November on the NASDAQ. So even here on the monthly candlestick picture, the NASDAQ looking like the lead bear. And we're still finding, currently, we just started this month obviously today, but still finding resistance here on this monthly T line. So yeah, the NASDAQ, definitely the lead bear. If this thing's going to turn bearish again, the NASDAQ appears that it's going to be the leader for that. All right, that's good for the NASDAQ, I suppose. Let's see what tomorrow brings. See if we get more clarity or some sort of a additional candlestick signals. Currently not an actual sell signal here other than just having a bit of a weak day on a gap up and finding some resistance on these moving averages and being overbought on the oscillator. Okay, so that's the NASDAQ. Let's go to the VIX. And on the VIX, let's see what we have here. So VIX right back to its 200-day simple moving average, but appearing to find some sort of support there. So that's interesting. I mean, the 50-day average is above the 200 on the VIX, so I suppose we technically still have an uptrend on VIX despite having this consolidation from our VIX high there that we put in at 2884. So this could be a nice little area to buy some VIX calls. Even if VIX is just range bound, we appear to be kind of near the lower end of the range. So even just a little scalping play for a VIX long might be a decent play to buy some VIX futures here, or even just some VIX calls, just to try and get a bounce off of this 200. Have to see how this plays out. But other than that, VIX not really offering much clarity as far as the overall trend of the market. VIX just in a sideways range at the moment. It did make a slightly lower low, but not really significantly here. Our previous low on VIX was 1609. Today we went as low as 1594 and closed at 1644. So really, basically just holding the previous low for the most part. All right, that's probably good for now. We'll check in later in the week if something interesting happens. And just to remind everyone that, yeah, Wednesday is closed due to the President Bush's passing. All right, Serial Trader signing off.